It looks pretty swagged up. Looks like I'm going to a freaking Formula One with this shirt on. Anyways, hello. Hey, what's going on, traders? It's Chris at Verlo Trading. Welcome to this new video. This is a video you're probably watching on the weekend. I'm filming this here during the week. It's Thursday. And in this video, I wanted to share with you guys some things that are very important. And I think that you should watch this video if you're a new trader, experienced trader, and all of the above, and you're interested in trading. Because in this video, I'm going to show you guys transparent trade results of live trading that I've traded my own money for since the beginning of the year, basically, since I switched over to the Teton order routing service to trade futures, basically. Okay, and that's it. And then I'm gonna basically, as we go on with that, I want to further a certain point that I have about the education and trading education in general, and just sort of an idea that I think is worth listening to. So stick around for the video. If you guys enjoy this content, press the like button, and if you want to support me, there's a link. You can click on the first link, or you can do the buy me a coffee link. That's fine as well. So let's get on with it. The first thing I want to show you guys is some trade results. So in Sierra Chart, as you guys know, I use Sierra Chart for trading. I recently discovered a feature in which you can add sort of text notes to your trades, and you can also filter out your trades, your trade activity log by these text notes. So it's the same thing as, keeping track of your trading setups one by one, and, filtering one setup at a time. And now through doing this, basically I've learned something. So right now you're looking at my entire trade results for the entire year. I can also prove to you that this is a live account, because if you look at my software here at the top, it says I'm connected to the Teton CME order routing, which is a live trading service. And I can also confirm that further by going to data and trade service settings, bringing this window over main settings, and you can also see the name of the clearing firm is Ironbeam. So this is a live trading account that I'm connected to. So I'm going to click on the top here, trade activity log, or I can also go to trade and then trade activity log, and I will bring up the same exact window. Now at the top here, it will show the account number, but I'm blocking that out because obviously I don't want the whole world to see my account number. Now, the main thing here is that I wanted to share with you guys something that I've learned about my trading, and it's basically that I have a trading setup that is consistent. And I have other trading setups that I learned that are much less consistent than the one trading setup I'm about to show you guys. So what I've done is I've hashtagged all my trades since the beginning of the year, and one trade in particular that has a very specific set of criteria for how that trade is meant to be executed. It has a specific hashtag, and I'm going to show you which one that is. It is this one right here, volatility. Now I'm going to click on that, and now I'll click on apply. So now my trades will be filtered by that hashtag. So any trade that has the hashtag volatility, which is basically a very specific trading setup that I've been working on for probably more than 2 years at this point. Now all these trades will appear here. And you can see that this trade has been profitable. There has been a total of 82 flat to flat trades. And I know that might not seem like a lot, but I want to explain to you certain dynamics of this trade. The first thing is that this particular trade does not come around very often. It's not a trade that there's multiple occurrences of it throughout every trading session. Sometimes I'm lucky if there's 2 in a trading session, or 3. Yesterday I was lucky, there was 2. Today there was none. Actually, my one trade today was a momentum trade, and it was not this setup. It was a different setup, okay? And the first trade here on this is basically beginning of February this year. And before that I was using a different order routing service, but these are all the trades since I switched over to this order routing service, the Teton service. And there's some trades here on micro S&P 500, micro NASDAQ futures, as well as 5-year treasuries, and there's maybe 1 or 2 or 3 trades on 10-year treasuries, but most of them are on 5-year treasuries. Okay, and you can see there's the different month contracts. I will just click on account stats, and you can see here the stats for each symbol. And well, basically what you can see here is that the setup has been profitable. And I know I'm not including commissions, but like I said, the impact is very minimal. Okay, I'll switch this over to another trading setup that has less trades to it. This is another setup that I've been trading recently. It's a setup that is a pretty high probability setup in the bond market, but it's also happened in other markets as well. And you can see that this setup as well has yielded a positive result. Now, the last setup, which is more vague, like this right here, I called it momentum. But the reason why there's going to be, well, you're going to see basically this kind of has more negatively skewed results to it. And the reason for this is because a lot of times when I was taking momentum-based trades, let's just say it's not exactly my strong point. I don't have as many confirming factors to those trades as I do with the other 2 setups. Anyways, I'm working on it. Actually, the one trade of today, which I can show you guys on the chart just for fun, which was this one right here, was a long trade on the 5-year. This was a momentum-based entry, but actually the entry was qualified with multiple factors. Whereas looking back on a lot of trades that I used the momentum tag to qualify the entry, a lot of those were sort of semi-aggressive entries, and I basically just put them all under that same category because they were all basically the same style of execution, which I would categorize as a momentum-based or aggressive trade entry, where you're kind of buying high or selling low. All right, let's just go through a few of the trade statistics here. Not every statistic is important for every strategy. So I'll go through the ones I think are important and relevant here. So I guess we can look at this first, the average trade open profit and loss. This is the MAE and MFE on other trading platforms. So as you can see here, open profit larger than the open loss. So basically this is from the moment I enter a trade till the moment I exit. On average, how many ticks against me are my trades going before I cut them? And on average, how many ticks are they going in my favor before I cut them? You can also organize those by winning trades and losing trades, and the maximum MAE and MFE as well. Okay. Here we can see our win rate. Now the win rate, there's a lot of misconceptions about win rates. In my opinion, for this particular strategy, I don't think the win rate is as important as, for example, if you did an aggressive scalping momentum-based strategy. I think with a momentum-based strategy, your win rate has to be higher. I think personally my win rate is actually even lower than this. I think it might be skewed because I had a couple winning trades in the last couple days here that were volatility based. And here you have your average winning trade and your average losing trade. So it's always good to see your average winning trade bigger than your average losing trade. And in general, I mean, you guys who follow my stuff, you guys know that I'm not really a fan of the whole bag holding thing, especially when it comes to day trading. I learned that the hard way a few years ago when I had a few trades where I kind of got trapped and I ended up bag holding some a NASDAQ micro position, a couple 100 points down. Since that trade, I've never bag holded anything. So I learned that the hard way. There's people that do that every single day live on YouTube though. We don't do that over here. Generally, you want to be staying in winners longer than in losers. So average time in losing trades here is about 1.06 minutes. Average time in winners is 1.40 minutes. So again, all is looking good there. The last thing that stood out to me here is the maximum drawdown here being at 117 and the maximum run up being at 407. Now I'll just quickly add commission to this just so you can see how things get impacted. And you can see that they do get impacted, but not by as much as they would be if I was trading other products. So what I've learned from my trade results is that I have my strong point is in this setup right here. This one, and this is the second best, and this is the third best. Okay, now these buttons here at the top of the screen, what they do is actually they change the trade window configuration so that the trades come automatically hashtagged, so I don't have to go back and tag them. But now one quick note I want to make about the particular strategy, again, that I showed you guys, the hashtag volatility, is that towards the beginning of the year, which would have been basically these months here, February, March, April, May, I was trading this setup, but there's actually probably around 6 or 7 occurrences out of all of them here where they ended up being like break evens, like this. And today, those trades would have all been winners, all around 5 or 6 tick winners, because when I was first trading this strategy, my management was a little bit too aggressive and I would scratch the trades a little bit too fast. So actually, like I said, around probably 6 or 7 of these scratches here that show 0 or maybe like a 1 tick loss, some of those are actually 5 tick winners or 6 tick winners. You know, the results technically would be skewed even higher in that case. What this shows me is that I have a setup that's consistent, and I'm not surprised because I've worked a lot on this setup. It's been something I've developed a lot, and I've even worked on code to try to automate certain aspects of this system because it uses certain models based on the volatility and price action that help qualify it. And the other aspects that qualify the entries are related to market context. Okay. And those, of course, haven't been coded at this point, so it's still discretionary. And I want to explain to you what are the implications of me having a trade setup that has edge and that has a positive expectancy. Well, the first thing is that there's absolutely a zero guarantee that the trade setup has a positive expectancy over infinite trades because, of course, you can't predict the future. Out of 289 trades, that setup, which accounted for about 82 of them, was consistently outperforming the other 2 setups. Okay, so that tells me that clearly I have some strong points in my trading and clearly I have some weak points in my trading. That's what my stats have told me thus far. Okay. So what this tells me is that I definitely need to be focusing more on that particular setup, and I definitely need to prioritize that particular setup when it comes to how I'm structuring my analysis and preparing for that particular trade. Okay, and there's many aspects that go into that. Again, I would have to start talking about them one by one. And of course, for me, this means that I need to be prioritizing this setup, eventually looking to use more size on this particular setup when the criteria is there. And using less size on the other setups until they show more consistency. Now, that's one thing. The other thing is I want to explain to you why having a setup that's consistent, and me being able to provide you guys with good quality information and good quality content on YouTube has no correlation whatsoever, okay? And this ties into the trading education industry, right? So it's basically this assumption that many people will make on the internet, and they'll say, well, if the person can't trade, or if they're not really consistent in their own trading, they can't teach you how to trade. And you should not take anybody's advice who's not consistent in actually trading for themselves. The main reason as to why that is false is because teaching is a discipline in itself, outside of the actual discipline that you're teaching the person or the people that are watching your content, okay? And I've learned this, I know this, because I've been teaching for more than 10 years of my life. I used to teach music, guitar, and piano. It was sort of like a side hustle. And through that, I've developed a high level of communication skills. I guess that kind of contributes to my ability to make these videos for you guys today, which is awesome. I believe that traders should learn from everybody and anybody they can possibly learn from. And that's because the market is a collective environment. So the function of teachers is to help students learn by imparting knowledge to them and by setting up a situation in which students can and will learn effectively. Now, I would add in this, the role of a teacher or a coach, another word, is to essentially determine where there are jagged edges or where there is room for improvement in the students that they are working with. And that's why coaches exist in all sorts of disciplines. Highest level performing athletes all have coaches, and the coach is often very experienced in the underlying sport that they're playing. So it's two different roles, essentially. The coach doesn't have to be a superstar performer. And what often happens is the people who are the superstar performers, very, very, very rarely, in my opinion, are they able to actually teach what they are doing. Because like I said, teaching is a different discipline entirely. They might be able to communicate certain aspects of it, but their discipline in actually teaching is much lower than someone who has been teaching for a long period of time. Therefore, their ability to communicate what it is they are doing and really, dig deep enough to communicate it to somebody who has no idea and who doesn't have the same deck of cards and experience that they've had, the teaching that they provide might be much lower quality, even if it's coming from someone who is technically the absolute best trader in the world or the best performing, sportsman in the world. What I'm trying to say is that you guys need to keep an open mind. You can learn from everybody out there. You can learn from absolute beginners. You can learn from super experienced traders, because everybody can still make mistakes. And at the end of the day, the market's a collective environment, and you should be keeping an open mind to learn from everybody. People who have been in the industry, it's very interesting to listen to people's perspectives, but there's a lot of people that have been in the industry for a very long time, but believe it or not, their edge is not the same as it once was, because often these traders are old floor traders, and back in those times, the market was completely different. If someone sat next to me for 6 months and I taught them my exact strategy, the one that has edge based on the stats so far, you will develop probably more consistency doing that than doing something that an ex-floor trader that was doing 40 years ago, because that has no application anymore. Do you see what I mean? And by the way, I'm not calling for students. I have no interest in really sharing that strategy right now at all with anybody. I also think that if I did share it, I don't think it would lose its edge unless I made like a 5-hour masterclass on every single nuance that goes into it. In that case, maybe would lose a little bit of edge. Maybe, right? But even then, who knows, right? Because the market is such a diverse and complicated place that for someone to effectively, copy the method is practically impossible. And even then, I would be assuming that my understanding of the system is 100% the right way, which of course it isn't, because nothing is 100% perfect in the market. There's inefficiencies all over the place. Another quick point about if you share a strategy, why it won't lose its edge. This is because everybody sees the market from their own perspective and from their own deck of cards. And I can give an analogy with music, for example. So you have one guitar player, my favorite guitar player named Guthrie Govan, amazing guitar player. You can listen to every single Guthrie Govan solo, transcribe them, and learn them all note for note, but if you play the solo, it will still not sound like Guthrie Govan. It won't. It'll sound like you, because you have some aspects in your unique way of playing the instrument that you have developed over years and years of habits and basically your own sort of insights that you've gained and developed, that you're still not going to sound exactly like Guthrie Govan. Do you see what I mean? The same is for trading. So when I teach you guys a trading strategy, I can show you every single little nuance of context that goes into it. But when it comes down to the execution of the trade, unless you're literally reading off a plan and a planned paper, which that's not how you trade, by the way. Unless you're doing that, you're going to end up probably executing it in your own way, which is not the same way that I would technically execute it. And that's it. Anyways, hope you found this video interesting, guys, and I will see you in the next one. Take care. Stay consistent.